Now, what are the advantages to the management? So once the cost data is been recorded, right, the first thing the management understands is that which activities are profitable, which products are bringing profit, and which one are unprofitable, which one is not bringing profit. Now, based on this decision, the company can take strategic calls, like for example, it can take strategic decisions like which product should be promoted, which product we should stop producing, right, which cost centers are performing, which cost centers are not performing. So, all these decisions the management can take if only if the management is having the right decision, right. Now, for a cost center or for a product, if it is successful in managing the cost, so we can measure the efficiency, and also we can think of that how it can be improved, right. So, this is one of the important area where the cost accounting data, the cost data plays a very major role, right. It provides the information required for the preparation of quotations and tenders. As I said that for quotations and tenders, right, it is futuristic in nature, but we have to give a quote. The company needs to give a quotation, right. So, suppose Larsen and Toubro is filling a tender for construction of a bridge, right. So, it has to for giving a quote that how much will it will charge for construction of a bridge, say it is 500 crore, it must have some idea that what can be the cost incurred for manufacturing this, right, for manufacturing this, for construction of the. So, the L&T, the company must have a clear idea that how much cost can be incurred for construction of the bridge. So, it can with the cost, it can add a cushion for profitability, it can add a cushion for unforeseen changes in the cost, right, and then it can come up with the tender value which it can quote. So, it is very important. So, 3 points. First is profitable and unprofitable, which one is profitable, which one is unprofitable, right. Second is how to measure the efficiency, right, and third is for preparation of quotations and tenders, right. There in these 3 cases it is a backbone, the cost record works as a backbone. It provides data for comparing costs in different periods for different volumes of output in different departments. So, different periods, that is the time series data. Now, when I am comparing, as I mentioned earlier also, that one aspect is I need to continuously compare the data with my competitors' data, right, because it has a very long term effect. So, if my competitor is been able to produce the product of similar quality at a lesser amount of cost, right, then in the longer run what will happen, my competitor will be able to sell it at a cheaper price, and because the quality of my product and quality of my competitor's product is same, so the customers will prefer my competitor's product and not my product. So, when that will happen, if it starts happening, then what will happen, my competitor's revenue will increase. As we discussed earlier, when the revenue will increase and the cost is also low, my competitor will start gaining market share, and its balance sheet, it will start creating value, its balance sheet size will increase, right. And what will happen to my company, because my cost is already high, right, and I am also losing in a way the market share. So, gradually what will happen, my balance sheet size will start shrinking, right. If it continues for over a time, if it continues over a time, the ultimate result will be that my competitor will be powerful, it will start controlling the market, and I as a my company's share, it will start falling, right. These are actually very common. That's why in a company, right, companies are the performing companies, they remain very alert on this cost aspect, and they always try to to invoke new technology, new production techniques, with the only objective is to keep the cost under control, right. Now, this is one comparison. So, I can I can across the board I can compare that if there are 5 companies in a particular sector, what is the cost of production of each of the company for producing the same quality of product, right. But there is another aspect of it, which is that for us, I am not comparing with someone else, but I am comparing with my own past performance. So, our objective is what, as a company manager, our objective is to continuously improve ourselves. That is what is called Kaizen, right. There must be, the companies must be in the pursuit of continuous improvement. The improvement may be small, improvement may be very large, but it should happen always, right, to achieve the ultimate goal, to achieve the the vision and mission of the company. Now, when this is happening, I can also make a longitudinal comparison, like in today is 2024, what was my cost performance in 2023, what was my cost performance in 2022, 2021, like that. And then I can trace out that over the companies, whether I am improving or I remain stagnant, or my performance is falling, right. In a corporate world, right, in corporate world, one must rediscover itself, right. There is no opportunity to stay, there is no opportunity for status quo, right. At corporate, there is no opportunity for remain status quo, let alone fall in performance, right. It is always the improvement, continuous improvement, which is important, right. So, we can compare over the years, over the months, how the performance, the cost data, from the cost data, I can find out that how the volumes, at different volumes of output, how the cost performance is happening. And from there also I can identify that what are the weaknesses I need to address, right. The next point is the exact cost of increase, the exact cost of increase or decrease in profit and loss is revealed. Now, you see what happens. So, there is a qualitative aspect as well as quantitative aspect of it, but I must know the number, right. Even if I am understanding that my performance is increasing, but how much, I should be able to express it in terms of numbers. So, that we can do with the help of cost accountancy. It facilitates the inter-firm comparison. This we have already discussed, that I have to, if a company needs to compare with its competitors. So, what strategy, it must be aware, it must be aware about the competitor strategies, because it is a fight, it is a competition for gaining the market share, for increasing the profitability, and there to remain sustainable, one has to keep a step ahead, right. It also prevents fraud and misappropriation, right, because you can track down, right, you can track down that if there is any misappropriation in, say, materials, right, or misappropriation in money, right, any wrong purchase, whether there is any any type of wrong decision has been taken earlier. Like for example, say in material cost, some material may be not been used, they are lying in the store for a long time, right, but not is been used, right. So, or its usability has got expired, right. The costing data can tell you this, right, and the companies can frame the purchase policy accordingly, right, to avoid the pitfalls. It provides cost data for fixation of selling price of products and services, right. So, these are the important, this we have already discussed before, this fixation of selling price. So, it helps management to decide that what is the right price for selling the product. Okay. So, these are some of the advantages which is gained by the management from the cost accountancy. So, just a brief review, right, what we learned till now. First is what is costing. Costing is a study of the ascertainment of costs, right, and we learn the tools and techniques of costing in a subject called cost accountancy, right. And in cost accountancy, we also learn that using the cost data, how the managers can take effective decisions, right, and how the managers can use this cost data for control, right, for control and evaluation of performance. So, this is a very important, what is a very important subject which is extensively used by the companies, the corporates, for achieving its objective, the primary objective. What is the primary objective? The primary objective is gaining value, increasing the balance sheet size and providing value to the stakeholders. So, for cost accounting, management is one of the major beneficiary. Who are the other beneficiaries? The workers, right. So, what are the advantages of workers? So, it is used, as I said earlier, what are the advantages of workers? It is used, as I said earlier, that for the performance measurement and evaluation, right. Now, ideally those who are performers, they need to be remunerated, right. So, for remunerating the performing workers, for example, so understand the relative efficiency of different workers, right, and say paying of reward, right, or bonus, right. So, we can use the cost data, which we will discuss later on when we will estimate the labor costs. And if the workers knows that his company is performing well, right, the costs are under control, right, it ensures a security of job and they feel more enthused to work for better performance, to work more and get rewarded for that. Okay. So, from workers' point of view, the cost accounting, the study of cost accounting, the practice of cost accounting is quite beneficial. Government is a very interested person in cost data. There are few reasons for it, right. First reason is that government, one of the major source of earning for government is tax, right. Now, this tax estimate is dependent upon the profitability, the production of the company. So, for understanding that how much the companies are making profit, right, so that the government can charge tax, right, it must have access to the cost data, right. So, it is for assessment of excise duty, income tax, right. For these purposes, the government must have some knowledge about the cost data. So, there are cost audit report rules, the cost report rules are there, where the companies, it is statutory obligation for the companies to send the cost data to the to the ministry. The Ministry of Corporate Affairs usually collects this data. So, they have to send that data. Now, it helps, there is another aspect, it helps in the preparation of national plans, right, for economic developments. Now, what are the national plans? National plan, there is a social aspect of it. Social aspect is that there are some products, right, which may be of scarcely available, or it may be required for social development, right. So, in such cases the government usually puts some control, right, over the pricing, right. And to put some control over the pricing, the government must have some idea, some knowledge that what is the cost of production of the particular product. Like for example, the pharmaceutical products. So, many pharmaceutical products, they are actually, life giving, right. So, and if it becomes too costly, right, then the common people may get into trouble. So, what the ministry does is they ask the companies to send the cost data to them, right, on regular basis, on periodic basis, and from at any point of time the government can ascertain that what is the actual cost of production, right, and from that actual cost of production it can see that what is the profit the company is making out of it, right, and it may intervene if required. Many a times if everything is all right, government doesn't intervene, but if required they can intervene, they can discuss with the producer. So, for developing the national plans for economic development also, this is quite important. Okay. Now, all of this thing, there is a certain kind of limitation, right. What is the limitation? The limitation is the cost of installation of cost system is very high. So, it cannot be used by small concerns, right. So, as we said earlier that this deployment of cost recording system, sometimes it incurs quite high cost, because you need to hire qualified people, you need to, you must have give a, infrastructure for it, right, must give an infrastructure for it. So, it requires funding, right. For the small concerns, the companies, the MSMEs where the revenue is low, that may not be quite possible, right, or may they feel little constrained doing that. So, this is one of the limitation for smaller companies. The larger companies, of course, they use lot of this thing. Cost varies with purposes, right. There is no uniform system of cost accounting applicable to industries. That is of course true. The cost accounting system which you can apply for automobile, it may not be exactly applicable for a bank, for example, because the nature of business is slightly different. It may not be exactly, same framework may not be applicable to say pharmaceuticals, because pharmaceutical industry usually follows the process costing. So, there is some variability. This creates the system more complex, right, because there is no uniform system, unlike the financial accounting, where except few exceptions, we follow an uniform system of accounting across the industries, right. In cost accounting it is difficult, because the cost accounting, it depends upon the nature of the product, right, nature of the production process. As the product changes, as the production process changes, it is difficult to do, and it is not exactly a science. Why it is not exactly a science? The reason is, as I said earlier, in many cases we use judgments, right, we use judgments, we take subjective calls, right. Like the salary to the CEO of a company which produces this mobile, right, how I will allocate his salary to determine the cost of this unit of mobile phone. So, I have to use some amount of assumption here, right. When I am using some assumptions, it becomes slightly subjective. So, it is an art, it is not a exact science. Okay. Now, in financial accounting and cost accounting, there are certain differences. Okay. So, now there is a difference between financial accounting and the cost accounting. So, few of the differences we already discussed, like financial accounting is primarily aimed towards the outsiders, the external users like shareholders, the common people, etc. but cost accounting records are primarily used for the internal consumption for managerial decision making, right. It is not for some industries it needs to be sent to the concerned government department, but basically it is for internal consumption and kept under confidence, because if the competitors get the complete data of cost, right, it may be problematic for the company. So, they keep it under wrap, they use it for internal decision making. There are few other the differences. The first one is the financial accounting provides information about the profit or loss and financial position of the business to owners and outside parties, as I said, and cost accounting is primarily for the primarily for the management, right, the internal consumption for decision making, and this one is for the owners and outside parties, the financial accounting. This is one of the major difference, right. And the accounts in case of financial accounting, it follows the requirement of Companies Act, right. And so, in Companies Act certain requirement for disclosure is there, right. So, to meet those requirements it is used. The accounts are maintained, and cost accounting, as I said, it is primarily for the internal, it is for meeting the requirement of the management, right. The transactions are recorded according to the nature of expenses, like for example, employee cost, the purchase of material cost. So, based on the nature of expenses, the building construction cost, the machinery purchase cost, etc. But in cost accounting, the transactions are recorded according to the purpose, right. According to the purpose means, suppose if my purpose is the ascertain the cost of an unit product, right. If that is required, if that is to be done, then the cost accounting is used. This deals with actual facts and figures, and it is partly with estimates. As I said, for example, as I already gave the example, that if I have to estimate the cost of this one unit of mobile phone and how I will allocate the CEO's salary into it, right. So, I need to use some amount of estimate there. So, in cost accounting, I need to make some amount of estimations. It is based on certain kind of assumptions. Assumptions are also there in financial accounting, but the nature is different. Only monetary transactions are recorded. Monetary and non-monetary transactions are recorded under cost accounting. Stock is valued and cost price of market price, whichever is lower. Stock is valued at cost only in case of cost accounting. So, these are the differences between financial accounting and the cost accounting. So before concluding, let me recapitulate the whole thing what we discussed today. Costing is about the estimation of costs. Why the cost estimation is important? The cost estimation is important because the companies need to know what is the cost it is incurring for producing each product, what is the cost it is incurring at each cost center, right. And this cost data, he can add profit margin to it and arrive at the selling price, right. And it can create its competitive strategy for gaining more market share, for enhancing revenue. It can use this cost data for cost control, to optimize its cost structure, right. It can also decide where more emphasis needs to be put. It can also decide that which products, which functions can be outsourced or it can be eliminated, right. Overall, this cost data can be used for achieving one single goal. That goal is creation of value for the stakeholders, right. So, for that the companies can maintain cost data. Now, this cost data it can maintain under different structures, right. Unlike the financial accounting where we maintain the financial accounting records at a particular structure under a particular structure, and we report it at a by following a certain format given in the Companies Act under the guideline. In cost accounting, because it is not for external stakeholders consumption, it is primarily prepared for internal consumption and internal decision making. So, there is lot of scope for customizability. So, I can create a cost record for say product wise. Suppose my question is that what is the cost per unit of each product that I am producing. So, the Tata Motors can ask a question like this. The Tata Motors can ask, okay, I have commercial vehicle models, I have passenger vehicle models, and I want to know that for producing each unit of this car, how much cost I am incurring, right. So, this cost, this information is an useful information for Tata Motors for managerial decision, and it can create the cost records in such a way that it can calculate the cost of producing say 1 unit of Tata Nexon, right. It can do that. Secondly, if it wishes to, if his question is, if the Tata Motors question is that okay, in Jamshedpur automobile plant, what is the cost I am incurring, right, per year in the engine division, right. So, it can create the cost data and it can extract the information from the cost data itself, and if it finds that the cost is, so what the Tata Motors can do is, if it finds that the cost of engine division is slightly on the higher side, so it can start finding ways to reduce the cost, right. Or alternatively, if it finds that the engine divisions need more capital deployment for efficient cost management, say it requires more modern machines, right, for reducing the overall cost, that decision also the company management can take on the basis of this cost data. So, it can have a varied use, right. It is a very, very useful tool, and it is an art as well as science, because we will see later on when we will discuss that many a times the the data, right, which we use, right, there we need some for allocation purposes and for decision making purposes, we may use some subjectivity, right. So, it is an art as well as a science, right. But for long term efficiency of the company, it is a very, very useful tool. Thank you.